Sup, freaks? It's your boy Marty Ben here to introduce this episode of Tales from the Crypt. Sat back down with our good friend Mauricio Di Bartolomeo from Ledn.io. Talk about a bunch of stuff. Ledn's recent raise, how they're growing the team, how they're working remotely, how they're doing their proof of reserves, how they're de-risking their interest rate products, the type of users they're seeing, how they're seeing transactions within Ledn increase, what's going on in Venezuela, inflation, how inflation works, whether or not people realize it. It's a bunch of stuff. A bunch of stuff. You guys are going to enjoy it. This episode is brought to you by our good friends at the Daddy fucking Cash App. Cash App is allowing you to stack sats, send sats, receive sats, sell sats if you so please. We're saying sats, because sats are the standards. 100 million sats in one Bitcoin. You don't have to buy a whole Bitcoin. You can buy sats, whole sats. $1 worth is about 1,700 sats right now. One cuck buck is 1,734 sats to be exact. And you can buy that on the Cash App right now if you went and did that. Cash App also enable you to send Bitcoin within the app via cash tags. If you want to send Bitcoin to another Cash App user, you can do that. Cash App can be your bank account. They're offering account numbers and routing numbers. Direct deposit your paychecks into the Cash App. Stack sats right away. DCA in the sats. Sats in the Cash App. If you haven't downloaded it yet, make sure you use the code STACKINGSATS. It's STACKINGSATS. You're going to get $10, and $10 is going to go to our good friends at Owls Lacrosse. That's Owls Lacrosse. Woo! Owls Lacrosse. This episode was also brought to you by our good friends at Hodl Hodl. Hodl Hodl is making it so you don't have to sell your Bitcoin. If you're in a crunch, you need liquidity. Lend at Hodl Hodl is a new non-custodial Bitcoin-backed lending platform that allows peer-to-peer lending and borrowing between users globally, anonymously, and on your own terms, okay? They're leveraging Bitcoin's native multi-sig properties to give you a no KYC AML solution to lend. It's available to U.S. to borrow. Solution to borrow. Use your Bitcoin as collateral to borrow. Available to U.S. users. Again, non-custodial, anonymous. If you're short funds, you don't need to sell your Bitcoin. Get some liquidity by borrowing, using your Bitcoin as collateral, again. And the great thing is you don't need to entrust someone with your funds, all right? Your collateral is going to remain in a multi-sig escrow. You hold one key. So you can prove that's not being rehypothecated, being moved, okay? You control a key. If you have stable coins laying around and you're looking to earn some yield on that, Lend to Hodl Hodl also allows you to offer those to be lent out to get a return on those. So create your offers and set your own terms at lend.hodlhodl.com. That's lend.hodlhodl.com. Go check them out. This rip is also brought to you by our good friends at Compass Mining. Compass Mining is working to make sure individuals can mine as easily as possible. They're gonna take away all the obscurity of it. They're gonna help you get a miner. And then they're going to find a hosting facility for you to plug that miner in with competitive energy cost rates. So they try to make it as easy as possible for you to go from zero to having a miner plugged in and stacking sats for you consistently as possible. They're locking up the deals with the hosting facilities. They're getting a way for individuals to get miners, okay? They want to help individuals get into the mining game. You pay for the miner. They acquire the miner. After as long as it takes, they plug it in, and then they start streaming sats to your wallet that you want them to. So go to compassmining.io, compassmining.io to check out all they're offering. They're trying to make it as easy as possible for you freaks. Last but not least, this episode is also brought to you by good friends at Brains. Brains, BRAIINS. BRAIINS.com. They're leaders in the mining industry. They've been running slush pools since 2013. Slush pool, first mining pool in existed back in 2018. Brains released the first free and open source firmware for Antminer S9 so that miners would have an alternative to Bitmain firmware. This was important back in the day if you don't remember. It was important for this decentralization after the Antbleed fiasco of 2017. It was discovered that there was a backdoor in Antminer firmware that could give Bitmain the ability to brick your ASICs remotely. Brains did not like that, so they created firmware for S9 owners to make sure that was not possible. In 2018, Brains verified that S9s could also run 13% more efficiently with overt ASIC boosts, and they offered that to their clients via Brains OS, a firmware that allows you to stack more sats as a miner. It's custom auto-tuning firmware to give miners more control over the ASICs. Again, allows them to stack more sats. Currently supports Antminer S9s, S17, and T17 generation, and the dev team is working to support What's Miners now. It should be out soon, TM. The open source initiative is still going strong. Brains is leading the way on Stratum V2 development alongside Matt Corallo and the Square Crypto team. Brains has been working. They have a working and live implementation of Stratum V2 on Slushpool and is included in the Brains OS Plus firmware if you're running that. And they also push out a lot of content to educate Bitcoiners about some of the lesser known aspects of the mining industry. So if you're looking to learn more, again, brains.com, BRAINS.com. They've got all this content. They've got these products. They're keeping you abreast of what's going on in the open source community. And they've got profitability tools. If you're a miner and you want to see how profitable you are, Brains is creating really cool calculators to help you visualize and illustrate the opportunity depending on what mining model, power cost you have, et cetera, et cetera. Check them out. Shout out to all of our sponsors. Shout out to you, freaks. Thank you for coming back. If you're liking the podcast, please give us a like, a rate, a review, a subscription. Share with your friends. We're looking to get this into as many ears as possible. Just trying to get quality Bitcoin information out there. And I think there's some quality Bitcoin information in this episode. Love all y'all. Enjoy.
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven.
I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
Mauricio, how the hell are you?
Doing great, man. Doing great. How about yourself?
Doing well. Very excited. RIP 3, third time back. A lot has happened since the last time we spoke, since the last time we met in person with Adam.
Mm-hmm.
Was that the last time we met? Yeah, Adam was with us in Brooklyn.
Yeah.
Drinking some Venezuelan rum.
Sure. Yeah. I didn't get a chance to send you over a bottle this time.
It's okay. It's Wednesday afternoon. As you know, it's probably not great to be drinking on a Wednesday afternoon when you have a young child.
I am very familiar with that. Welcome to fatherhood.
Yeah, it's you got to change a lot, right? You can't just be getting drunk all the time recording podcasts. People frown upon that. You can't be the drunk dad.
But it comes with a lot of great benefits.
The benefits far outweigh not being able to drink at random hours of the day to record podcasts. What's going on, dude? Like I said, a lot has happened between the last time we spoke and today. You guys are crushing it at Ledn. Recently raised some money, expanding the team, expanding your product suite, introducing proof of reserves, where it's been around for a while, but really driving home like how you guys are doing it, explaining it, and then doing some interesting stuff on the interest-bearing side as well, based off the conversation we had a couple of weeks ago.
Yeah, definitely. There's been lots has changed since we last spoke. I believe the last time we chatted was September 2019 or something like that.
Mm-hmm.
So that was, I think we were probably just over a year old, or even just turning a year old at that time for Ledn. And I think, now we've been, we underwrote Canada's first Bitcoin-backed loan in late 2018. And since then, we've been really preaching to people, the benefits of Bitcoin-backed loans and, why they could be useful. From there, we set up our Bitcoin savings account. And following that, we set up B2X, which is a loan to buy more Bitcoin, which is a product that really resonated with our clients. And then after that, we launched our USDC savings account. And I guess most recently, we closed that financing round earlier this year, which brought in some really great investors, the likes of White Star Capital, Coinbase Ventures, an affiliate of Susquehanna, CMT Digital, Kingsway Global Founders Capital. So that really brought a lot of expertise, both on the product side and on the strategic side. Some of these people are involved in the lending space, like CMT and the Susquehannas of the world, and some others have great geographic expertise. Like in the case of Kingsway, they're very big in Africa and other frontier markets. And Coinbase, of course, they have great pulse of the space, and they really understand it. We thought that was a great mix of groups to bring together. We announced that round, like I said, I believe it was mid-January. And since then, we've been really hard at work building out the team, essentially growing our team. I have some exciting news to share on that front too. Somebody that'll be joining us, we can share that maybe in a little bit. But the other piece that we're incredibly proud of is our proof of reserves, structure. We did the first proof of reserve attestation ever for a lending company with Armanino LLP, which they're great, by the way. I really love working with them. And yeah, so I think that has resonated with our clients. We like to build things that people ask for. That's really the only way we grow and get better. But that's really what we've been, and we've grown a lot. Our clients are growing at about 25% month over month. And then on the, as far as like assets in the platform goes, we've pretty much, I want to say almost 20x where we were, a few months ago. So the growth has been pretty phenomenal. And people really seem to have been waking up to, borrowing against your Bitcoin, like, popularized, I guess, in a way by Michael Saylor, and earning interest on your Bitcoin. That's also become, a sort of activity that more people are seeking out to do. So, we've been in a way kind of paddling ahead of that wave for a few years now, and now that it's formed, we're just standing up and surfing it.
Oh yeah, and that's a huge topic in the space. Obviously, right now is like the risk management around all of this, and that's why I wanted to bring you on specifically to talk about like your proof of reserve attestation. And there's obviously a bunch of competitors in this particular space, and each has a different way of articulating the risk management of their products and providing different ways of basically de-risking these products and making customers comfortable with engaging with them. So like, let's start with like proof of reserves. Like, how are you guys making this possible, and like what peace of mind is it bringing to your customers specifically?
Yeah, great question. So the proof of reserve attestation that we did with Armanino LLP, the intent of this exercise is to essentially have Armanino as an independent third-party accounting company and an auditor, etc. But they're coming into Ledn. They are assisted by management because obviously we have to facilitate their access to some information. All of this is done, by the way, in an anonymized way, in a private way. All of the essentially the client data is anonymized. So just for privacy's sake, we're very big on that. We don't want any data that people don't need access to be getting out there. So when they come in, essentially, we facilitate their access to this anonymized data so that they can basically confirm the balances that clients have on the Ledn platform. And we also essentially get to show them, or they get to see our lending agreements with our lending counterparties. They get to see our custody agreements and our custody balances, and they get to see our trading balances as well. So the point of this whole exercise is to tally up all the assets that Ledn has on behalf of clients on the platform, and to look at all the assets that Ledn has either on its lending relationships or on its trading or on its custody, and make sure that Ledn in fact has more assets in custody, lending, trading than they owe essentially back to clients. And for how a Ledn client can verify that is that an anonymized ID or an anonymized hash for that particular proof of reserves attestation is provided to Ledn clients on the platform. So they can essentially take that ID, go to the Armanino Trust Explorer website, which is owned and managed by Armanino LLP. They input their hashed ID, and they can confirm that their balance as of the day of the attestation matched exactly with what they have on the platform. And any client with a balance or an active loan can do this. And so that gives a client the peace of mind of knowing that their assets are properly accounted for internally at Ledn.
Mm-hmm. And how often are you guys doing these attestations?
Every 6 months.
Oh, nice. Awesome.
Yeah.
And so what's it been like building that particular, I mean, you mentioned that you had to come in, management had to help out your third party auditor. What's that process like? Was it teaching them a lot about Bitcoin? Were they sort of up to snuff with how everything works, or how much hand holding was there?
No, it's a great question. So we were the first lender to ever do this. So they didn't, there was a bit of learning. There was a little educating essentially on, how to assess the assets the client have on platform, how to assess the balances that Ledn has on either its lending counterparty or its trading counterparty or its custody counterparty. And so there was a bit of us educating them about how our business works on the back end and where they need to essentially go look. And making that information available to them. And they're actually really up to speed on what Bitcoin is, what an ERC20 token is. So they're very knowledgeable about that. What we had to do a little more, educating on was like essentially the inner workings of our business. Like, how do we earn that yield? It gets lent out to counterparties like Genesis. Okay, what are those balances? Can we see them? How do we verify that those balances are actually true? So there was a bit of educating on what the key pieces that they had to essentially focus on were. But once they got it, and once the structure is set, it makes the ongoing attestations much easier to manage, right? The first one was obviously the hardest because there was no set structure for it. But now that we've worked out a model, it becomes much easier. And that's why we wanted to do this very early on. Because the more the business grows, the more counterparties you add, the more activities you start adding, it becomes more and more work to verify all these balances and to basically come back to a holistic view that gives the client a very precise response, right?
Yeah. I guess that's like naturally leads to the next question. Is like, how do you manage the risk of bringing on new counterparties and interacting with them and distributing Bitcoin on the other side of the book?
Yeah, so one of the things that we did as part of this raise is we started building out our lending desk, essentially. So one of the people that started today was actually John Glover. So John has a wealth of experience setting up the FX the FX desk for Barclays, most recently in Canada. He'd also set up the FX desks and derivatives desks for TD, actually, both in Canada and in London. And so he's been in this space for a really, really long time. He's seen he's incredible at risk analysis and risk management. So he joined us as our chief risk officer, and he will be leading the build out of that desk as we, until very recently, and even just now, Genesis has been essentially our primary counterparty on the lending side. But just given the sheer size that we're getting to now, we are exploring essentially diversifying that risk to other high quality and amazing counterparties. Some of them are actually already in our cap table, like the Susquehannas of the world, and essentially getting to a place where we can offer the exact same quality or even better, always continually try to improve the quality of our counterparties, but doing that in a way that is sustainable and that manages risks in an optimal way.
Yeah. Like, I wonder what John thinks about you can't speak for John directly, but like that's just going through my head, like coming from like an FX desk to a Bitcoin desk, like the nature of the assets, Bitcoin being the super collateral and FX currencies being a bit different, like obviously in nature. Like, how does he view the difference in approaching that, like risk management in your mind, or how would you view it? It's probably a better question because you can't speak for him, having to deal with all these risks.
Yeah, so I think the FX market has a lot of similarities to the Bitcoin market, perhaps more so than even the stock market. And that's for a few reasons. Obviously, they trade 24/7. there's different venues at which these currencies trade. So there's not really a one source of truth for a particular pair of exchange currencies. So in that sense, I think there's a lot of similarities. There's obviously an added element of volatility when it comes to Bitcoin. But that is volatility is really a problem as much as there's a liquidity problem, right? Because, as long as the asset has deep liquidity, like as long as you can still book trades for very meaningful amounts. So, back when we had March 12th last year, there were trades getting booked at the worst hour that Bitcoin has seen, and they were getting filled like no problem. So I think for many lenders, last March presented really a test of fire for all their risk systems. But coming out of that, I think a very interesting thing to see was that Bitcoin liquidity held up like a champ. At all times, you were able to essentially, even if you were in a position where you had to execute on some sales to protect the risk, which many lenders were in the position of having to do back in that time, you were able to do that, right? It really became a matter of managing that client relationship, right? Because the move happened so drastically that, inevitably there were a few clients that couldn't respond in time or didn't have the additional Bitcoin to cover. So they did suffer. So it's really, it wasn't really so much a matter of, oh my God, are we going to be able to, place these sales so that we can protect the business in the book? It was more about, once this happened, how do you go to your client and explain why you had to do this, and that this is, this is what had to happen. So it was really, there were a lot of learning lessons from that experience. But yeah, I think, I would say that above anything else, Bitcoin liquidity is a way, a bit of an antidote against its volatility.
Right. So that's what I was doing while you're explaining that. Like, obviously, literally a year and a week ago today or around, so you had that event, and market cap starting Monday, March 16th, 2020 of Bitcoin was 103.9 billion. And today it stands at 1,680 billion, or excuse me, 68 billion. Like, we've literally added $1 trillion in market cap in 1 year, which is pretty insane to think about. So what does that do for liquidity? I guess is a good question. Like, yeah, so the dollar amount's gone up by 100 trillion, with the free float of Bitcoin has arguably significantly fallen as people lock them up and put them in treasuries. How does the free float liquidity and the dollar amount liquidity sort of play together in your mind?
Yeah, I think, as more sophisticated investors with very big balance sheets start participating in the Bitcoin markets, I think that only helps liquidity, because to your point about even liquidity that gets, put in a treasury, locked up and put in treasury and stuff, that, even those companies, right, like they're taking these positions to protect the reserves they already have, right, and to optimize the reserves that they already have. I don't think that there is a scenario where, what I'm saying is that these companies or these entities that are participating in this market, I view them as very sophisticated participants. So if there's ever an opportunity for them to, either participate in or provide some of that Bitcoin to help out with liquidity and make a little bit extra doing that, that's great. The other piece of that is, like, as you get more sophisticated people join the market, you get evolution on settlement times, right? So whereas before you might need to have assets on platform to settle, when you have X billion Bitcoin on your treasury and you want to place a sell order, a lot of brokers are going to say, okay, like we'll take T+1, T+2 from you guys. And in a way, even though those Bitcoin are locked up somewhere, it doesn't mean that they're taken away from the liquidity pool. Like, those Bitcoin could still transact with the right brokerage relationships. And so I think all in all, it just improves liquidity all around.
Yeah. And again, adding $1 trillion in market cap in a year is pretty insane, right? Like, literally $1 trillion, and everybody's going crazy when you hit the $1 trillion market cap earlier this year, but it's like we hit 1.1 trillion and we've been floating like below and above that a little bit for the last few weeks, and it added $1 trillion in a year.
Well, how much has the Fed added?
Yeah, that's a good point, right? Trillions.
With an S. And now we got 2 more coming for infrastructure.
Right. That's why I love speaking to you, particularly because you have very good insights. Not only, I mean, we were talking about before we hit record, you guys have been putting out a weekly newsletter and some YouTube content for Ledn, and you've been jumping into Fed policy and being very on top of that. But you also have insight in the international markets as well, being up in Canada, obviously, and then Ledn, just having some personal and professional exposure to that market. Like how is all this Fed money printing and like affecting like what's going on in LATAM up in Canada? I mean, Canada's printed an insane amount of money as well.
Yeah, Canada's printed an insane amount of money. Not so much LATAM.
Yeah.
Right. But
I guess the point I was trying to make, like, are the customers down there reacting to what's going on here? Right.
They are. I mean, there's a couple of dynamics at play, right? So to speak to Canada just briefly, right? Like we have the usual signs of call it financial symptoms in the economy when you print a lot of money, right? Like real estate markets through the roof. They're tightening up mortgage rates to try to cool down the market. Rentals are hitting rock bottom. So like what you're really just seeing the explosion of the wealth gap, right? Like the second you say, rentals are going lower because people can't support to live in these places, but at the same time, property prices are skyrocketing because those guys that have assets are just doubling down, like taking another HELOC, buying another house. That just fuels the wealth gap, right? And in Canada, it's kind of a good not experiment, but it's a good subject to study to see the type of side the consequences, I guess, of printing money. Like you're helping some, but you're helping people in one way, but you're also hurting them in another way, right? Like there's always a trade-off. And I think people focus a lot on, can you get me this free money now? But they don't necessarily think what that money is going to cost me in the future, right? That is interesting to watch, to say the least, here in Canada. In Latin America, one thing that I found surprising was that it doesn't typically happen that the U.S. is the top printer, right? Like typically, as the U.S. is printing, other places are printing more because they have bigger problems, mm-hmm. right? What I think is kind of, in a way, been a bit like more of a paradigm shift for people that are used to looking at inflation and studying inflation elsewhere and comparing it to the U.S. is that the U.S. has essentially stimulated its economy so much that it's poised to even outgrow China this year. Like think about that for a second. That's
mind-blowing.
Insane. Yeah. And so typically when you have these like inflationary waves, they tend to be a bit of a global phenomenon because places like, typically if somebody like the US is having to print, then somebody like Mexico who like exports to the US, or somebody like Colombia or Venezuela that are in the same or a similar boat, they theory would say they have to do the same or more to kind of keep it up, right? What's been happening now is that the US has just been relentlessly printing and relentlessly stimulating their economy, and you have places like Mexico who are not. And what that's done, and more so, I'm not sure how much of it is because of Mexico, and I'm not sure how much of it is because the Fed wants it to be this way. But when you look at the foreign exchange rates for the peso, it's gotten stronger over the last year. Like the Mexican peso, the Colombian peso. So to me, like I have to check back, but I think the Brazilian real is probably not in the same boat because they've had a little bit more issues to deal with. But that's one thing that I've found fascinating, which is that inflation fears seem to be higher in the US than they are in other places right now. And by sheer virtue of the US being such a powerful and wealthy market, their fears of inflation have driven up assets like Bitcoin and have driven up assets like the stock markets, right? And it's when people see that and there's fear of inflation on the dollar, well, that trumps fear of inflation pretty much in any other currency, right? And so people start running to hide or to protect themselves from inflation. Many have found Bitcoin, many have found stocks and equities, but I think this is a trend that will probably continue so long as the Fed continues to print.
Yeah, I think I'm looking at it right now. Mexican peso at one point was like 25% stronger against the dollar, like intra-year, like from March to December. It's pretty crazy. No, I mean, that's the weird thing about it too. Like, again, I've said it many times on this podcast. Like the Fed and the Treasury now, with the overt stimulus, they just did 1.9. Now they want to do 3.9 trillion right after it, for infrastructure and more airdrops. At what point socially? And then like another question I've had proposed on this podcast, particularly with an oil guy in us, Alhaji. Like, at what point do other countries start looking at what's going on here and being like, this is not good? And like, particularly like oil markets, like at what point are some countries going to denominate their oil sales in dollars but settle on a different currency like Bitcoin or something else? I'm just rambling here, but this is really weird, interesting period we find ourselves in. Like, a lot of people say the US dollar is a reserve currency, you'll never lose that status. And they'll point to like just the amount of money printing and how little it showed up in official inflation. But I think anybody who's actually gone to the grocery store, talks to anybody building things, that inflation is rampant right now. And at what point does like the social aspect of all this kick in and people just begin to openly question, like, what the fuck is going on? Like, should we be depending on the dollar like we have in the past?
I have a bit of a polemic answer to that one. And if you look at my Twitter profile, it's actually a posted tweet that I've had for over 2 years, and is bad money never dies. It just resets. People, when people, and this is something I guess that I took away from the Venezuela experience, people don't associate their problems with their currency. They associate it with the government, they associate it with their boss, they associate it with their landlord, but rarely do they make the connection that I'm being held back from wealth because of this currency. And that happens for a few reasons, and perhaps that may change. But I'll tell you, one of the big reasons that I thought that was happening in Venezuela is because governments, particularly authoritarian governments, the first thing they do, and a sign of concern, is they go after censorship on the media, or in the media, right? And they do this in a way where, after a certain point of time, they control the narrative across most media, right? Because they can even sanction what Twitter, where Twitter is available. I remember back in my days in 2013, 2014, the Chavismo, I don't know how to call it, cartel, was essentially deep in Twitter. Like, if you logged into Venezuela on any given day and you opened up Twitter, the trending hashtags would be Chavez, I love you, or I swear to God. And it got to a point where I actually had to stop using Twitter because I found it so repulsive to see how, and think about that for a second. Like, you're a person in Venezuela, you're trying to show the rest of the community or your country that the fiscal decisions and the governmental decisions that are being made are going to take you down a path of destruction. And you have Chavez literally nationalizing companies on national television, like pointing a finger, being expropiase. And on the next day, you had the trending topics on Twitter: I love Chavismo, Maduro, Chavez, mi presidente, like, and these outrageous quotes on this. And they did it almost to like spite you. Like, you would log on and it was so disheartening. It was like a blow to your stomach, right? To see these things happening. And then, because I was sitting there being like, these are bots. Like, these are bots. There's no way the people that are out there they don't even have a phone. They don't even have a computer. Like, how are they tweeting? And so it was just so blatant. And it was so hard because everywhere you looked, it was like you turn on the TV and it was like Chavez smiling. It's like, yeah, we're going to expropriate that building. We're going to expropriate that farm. That's going to go to you, Maria. And that's going to go to you, Miguel. And you're going to have your farm. And then you're saying, okay, no, that you can't just like fabricate things. Like, these people have to know how to run the farms. Like what happened in PDVSA, or what happened in many cases that something got expropriated in Venezuela was Chavez came, you know, the union was mad at the bosses, and Chavez came like, okay, we're going to take this over. Union is now the owner of this factory, right? Go ahead, union, you know, go get them. And the union would go at it, you know, and they would try to do their best. But eventually they were like, guys, this business is not making any money. It's like, Chavez, it's like, we need your help here, bro, because, you know, this business doesn't really make money. And Chavez was like, you know, like, sorry, guys, like, you know, it's like, what do we do now? Right. And
Gave it to you. Yeah.
And that happened on and on. And what ended up happening is that we destroyed the productive apparatus entirely. Like, you know, the example that I gave you were, you know, a couple of high profile farms, a couple of high profile like dairy companies, because it started with food. Food became the first sort of national security issue. And on that premise, they started nationalizing food companies. Then I'm not sure if that was before or after oil. I think the first one was oil, because oil was like the first national security strategic thing that they did. And he basically wiped out all of the PDVSA staff. So PDVSA was Petróleos de Venezuela. And one of the first things he did is he fired everybody at PDVSA. Because PDVSA essentially, once he took office, PDVSA went on a strike. They said, okay, you know, these policies are a little bit crazy. You know, we are the economic engine of the country, and we're taking a stand to basically let you know that we don't agree with some of these things that you're doing, right? Instead of going to talk to them and figuring out how to keep the top professionals there, he went and said, oh, you really? You don't like what I'm doing? No problem, go somewhere else, you're fired. And that's how we ended up, and they did. And if you look at Calgary today, you know, you're in the oil gas space, ask around how many oil companies have hired Venezuelans from PDVSA. Probably one in each company, many more, because they were great professionals. They were running one of the top oil companies in the world. And all of a sudden they were left without a job because of their political beliefs.
Yeah.
And many companies happily scooped them up.
Right. And then I don't want to laugh about it, but it's just like you kick all the engineers, all the smart people out, and you find that you're going to have problems with that energy infrastructure, you know, rolling blackouts, the inability to actually keep wells up and running, like all that stuff.
Our oil exports are down to, I have to check the numbers, but I think they're sub 1 million barrels per day. When we were producing, I think when he took office, we were producing somewhere around the order of like 4 million barrels per day. So it's been decimated. And yeah, so I guess going back to the original point I was trying to make was that bad money never dies. Like, most people will always be thinking about how they can get more free money, right? And they don't really understand, or they don't, because it's really hard to make the connection of government's printing money, therefore I'm going to be made poorer if I don't have assets. Like, that's a connection that is very, very hard to make. It took me a long time to make.
No, I mean, yeah, especially as you have politicians and the Ministry of Truth, as you just described, sort of sending people in the wrong direction, right? And framing the narrative, or framing the boundaries from which conversations around these topics can happen in areas where the problem doesn't fall within those boundaries, right? Like here in America, red team versus blue team, left versus right, and Trump's the problem, Biden's the problem, and nobody's ever really given the opportunity to debate whether or not the money's the problem.
Yeah, 100%. Like, I think if I had to bet, I would say that, you know, it's more likely that if real estate prices start getting off the chart in the United States, it's more likely that the messaging is, you know, you got to stop speculating on houses, guys. Like, three, four houses, like let's put a cap on these investment properties because these speculating impresarios are driving up the home prices for all of our Main Street America people. It's not, hey guys, we printed more money, so it's natural that you're protecting your wealth by purchasing hard assets like homes. They'll never say that. They'll say that these actors are going against the best interest of their average American. So that's kind of where I'm going at. It's like, it's this ability to shift narratives that is, for example, like if Bitcoin continues to grind higher, they'll never say, oh, it's because we printed a lot more money. They'll say it's because it's a crazy group of speculators that are out there driving the price of this thing higher. And but at the end of the day, like you're creating the sickness, and you're lying to people about the medicine for that disease.
Yeah. And the causes of that disease too, right? Like, and it's happening here, Mauricio. Like in the Philadelphia area, I know my cousin's a real estate agent. You tell me it's crazy. Like before even houses hit the market, they're selling like 50% above what they would be listed for because people are just trying to scoop them up.
You want to hear a crazy stat that we were on this letter? So one of the things we keep track of in our newsletter is, and it went away, these kind of inflation signals, right? If I told you that home prices in the Hamptons more than doubled over the year 2020, would you believe me?
Yeah, because people got driven out of the city, right? Like,
well, that, and wealthy people are looking to protect their assets.
Right.
Their cash is melting. And because everybody's sitting out in the pandemic in New York saying, oh, where am I going to spend the next year? Oh, wouldn't it be great if I could go to a beautiful place and also protect my wealth? Hey, why not? And so what I was trying to look for when I was putting this together was, as I was mentioning to you earlier, what's happening in the United States is a bit fascinating because the inflation hurts different people in different ways, right? What's happening in the US, what I think is fascinating about it, is that it's hurting the richest people the most because they are the ones that have the largest cash balances, and they have these, they have to keep this money, they have to preserve the value of all this wealth that they have created, right? So they don't want to have it on something that's giving them a negative real return like cash, right? If you're looking at so desirable assets is something Michael Saylor talks about, like inflation on desirable assets, which I think is a very great way to describe it. So what I wanted to look at that was say, okay, what are the most desirable assets? Well, let's look at the desirable assets from the wealthiest group of the wealthiest country, right? Like New Yorkers in the United States. Where would they like to buy a house? Well, based on what I know, I'm not a New Yorker, but based on what I've read around and I know, seemingly the Hamptons is kind of like the place to go if you're a wealthy New Yorker, right? So I said, that's the place we need to look for first at real estate prices. And of course they were vertical. And like, okay, great. What about fixed income? What about the cost to have a cash flow of $120,000 per year for retirement? Well, at the beginning of the pandemic, you would have had to have, I think it was something in the order of like $3 million invested in AAA bonds to get $120K a year. By the end of the pandemic, that was $4.5 million to get the same cash flow. So all these assets are getting priced out a lot. It's stock market. Like I say this jokingly, but just now we're getting all this like waves of stimulus getting pumped and pumped and pumped and pumped, right? Some of it's not even out there yet. Most stocks, if you look at the major indices, they are trading higher than they were pre-pandemic. Right? What that says, if nothing had changed, if there was no stimulus pumped out, that could never be, because there are more. Yeah.
I mean,
I don't need to tell you how outraging this. Yeah.
Complete disconnect. Like, you shut everything down, yet the stock prices of the underlying companies skyrockets. It makes no sense. It's all, that's what like how fast can this deteriorate, particularly here in the United States? A lot of people say it'll take time, it'll take time, it'll take time. I don't want to be like a doomer or anything, and I'm not a doomer. I'm a Bitcoiner. I'm very optimistic about the future. I think Bitcoin helps us get away from this disconnection, but I do worry about people not grasping how quickly things can unravel. And again, we just mentioned earlier, 1.9, 3.9, that's $5.8 trillion that are about to be thrust into the economy potentially this year just by the fiscal side alone. It's, and again, like, my parents own a coffee shop. My dad sent me email after email of their suppliers raising prices between 5 and 8%, which is nothing to scoff at. It's higher than CPI, and these are like grains prices, like bread and pastries, like things that should be included in the CPI basket. Great American Mining, the copper wiring that we use to build out some of the electrical infrastructure in our containers, up 35% in the last 4 months alone. Like, had the real estate developer on, Kelly Landon, a couple of weeks ago. The price of lumber is up like 400-500%. Like, people are stopping construction on homes because prices are too high for the raw material. My wife came home from the grocery store yesterday. Like, she hasn't been tracking it, like writing it down, but she's like, I'm pretty sure toilet paper and paper towel prices are up significantly. They seem a lot more expensive than they should be. It's like these little things. And then the Fed and their patsies in the financial media be like, oh, it's not real inflation. It's not real inflation. Like, I had a Fed official from the St. Louis Fed hop into one of my threads the other day being like, you don't understand inflation. It's like, what? Like, they like gaslight you. It's very disconcerting is the only word I can think of. Because you have this disconnect and this inability to actually confront what seems to be the truth. And that's the other thing, like the ministry of truth. Like, they confuse you, they gaslight you with what the truth actually is. And the CPI is a tool of the ministry of truth, I would argue.
I couldn't agree more. I think the CPI is almost a laughable joke these days on what it excludes and what it includes, and how they just do whatever they want with the components so they can show the number they want to show, right? Like, if it's, change AAA steak for, ground beef, and all of a sudden your cost of beef is in line, but it's really about, they're swapping apples for oranges, for strawberries, and they're presenting it to you as like this uniform smoothie, and it's really not. So you really need to look under the hood. And I guess why, and I don't mean to be like a doomsdayer on this, like, oh, people are never going to wake up, like the collective masses will never understand inflation. I hope they do. I really wish they do. But for the most part, even in Venezuela, I still think today, you go down to Venezuela and you poll 10 random Venezuelans about what inflation is, they'll give you a completely wrong answer. Like nine of them will give you a completely wrong answer. Because it's a hard problem to understand, right? Like, most people understand inflation as rising prices, but nobody gets why they rise,
right?
Or it's making them rise, right? One of the things I remember going back to the Venezuela experience, as hyperinflation was starting to get kind of off the rocker, property has been generally priced out of the average Venezuelan for a while. So property is not necessarily something that Venezuelans keep an eye on, or like, what's the price per foot of property in Caracas? Like, most people have just kind of come to terms that they'll never be able to own a home. So to them, their day-to-day is more, oh, can I get some sort of government subsidy rental and some government subsidized food, and I have a government subsidized job. But typically the first kind of flare-ups socially happen because of food, right? Because as you print this money and you start doing all these programs, well, the supply chains start adjusting, right? Like, to your point, the first things that adjust are the supply chains, right? And then that slowly makes its way out to the end consumer. In Venezuela, the first kind of issues were happening around people's ability to purchase protein, right? The first issues came about it was because of price of chicken and the price of beef. And I distinctly remember what happened back in those days, because I was very much there, and kind of, I was, I and a bunch of other Venezuelans were like the old man yelling at the sky, because people were coming out complaining about the prices of chicken and saying, oh no, Chavez, these guys, it wasn't, the rage from people never came from, the rage of people was never directed at Chavez or the free money that he was pumping. Essentially, when chicken prices started going up, the question became, and also because Chavez was a very communist person and socialist person, essentially what happened when prices of chicken started going up was that the narrative became these capitalists, the greed of these capitalists is starving the people, right? So you need to go fix those capitalists, right? And so Chavez, and that's when we started seeing union, you want the farm? It's like, here, you take the farm. And then the union came back and said, hey, we can't really import the chicken feed because we can't access dollars. We actually need a lot more bolívares to buy the same chicken feed that we were buying 3 months ago. So it'll be really hard for us to sell that chicken at the same price. Like we can't drop the price of the chicken. Some of our inputs are foreign and the dollar is through the roof. And then what Chavez did back when he had a lot of oil money was he said, don't worry, I'll sell you the dollars at cheaper than before. And of course that made things work, like that was a band-aid because they had all this oil money and he was just basically subsidizing everything, right? And that made it work for a little bit. But governments are always in the business of staying in power. They're not in the business of solving the issue, right? So that's something that is very interesting because we're also dealing with very long-term problems. And we expect short-term governments to fix them. So I think there's a big disconnect there because the decisions that the Fed is making today are going to affect this administration and the next administration and the administration after that and the administration after that.
Right. That's like the point I was trying to drive at earlier. Like everybody wants to blame Biden, blame Trump. I fall prey to that framing sometimes too when I get a little too emotional. But George Bush started TARP, handed it off to Obama. Like things leveled off for a little bit, but towards the end of Obama's reign, you started tapering, and then when Trump took over, that tapering sort of led to some spasms in the market, and you had to turn the money printers back on. And you had COVID, and Trump did his COVID relief plan, and now just handing the baton to Biden, who's taking it to another level. It's all meet the new boss, same as the old boss, red, blue, purple, yellow, whatever. The incentives of the system, particularly the political system, and the politicians just don't want to be the last one holding the bag. So they'll do whatever is politically tenable at the time, which is just print more money. And then the whole time, the common thread throughout it all is the Fed behind all of this, just basically exacerbating it and allowing it to happen and accommodating this type of misallocation of capital at a mass scale.
Well, and I thought, what's his name? Ross Stevens made a great point when you're talking about central bankers and how they behave, right? Because when you listen to central bankers and you talk to these guys, they were really smart guys, most of them, like really smart guys. And they get it. they get what they're doing. And there have been some voices within the central banks that have essentially tried
David
to stand up to the government.
David Fisher, one of them, I think.
Yeah. So there's voices that do try to jolt some sense into what's happening. But the problem is that these voices, whether it's one guy, two guys, five guys, they're up against a political giant, which is the masses, right? And they have to back down eventually. Because the other piece to that question, or the other piece to that argument, is that although it creates a lot of inequality, it may prevent a revolution. Because I'll say it. I'm not sure if it's been said before. I'm sure it has. But if we hadn't been able to send these stimulus checks, or the U.S. hadn't sent these stimulus checks, and Canada hadn't done things like CERB, I do think that there would be a lot of social unrest. We actually started seeing glimpses of it at the beginning, right? Like there was a bunch of things at play, right? Like there was a polarization between the Trump and Biden. Like Trump ended up being a very polarizing guy for American politics, and you had like friction on that side. But there was also a lot of, imagine if you had done all of this, but people defaulting on their homes, defaulting on their credit card, getting their cars repossessed, and then you had all this happening on top of that. It creates this. It could potentially overthrow a government, right? And no government wants to see that happen. So it's always about picking the lesser of two evils. And one of the things that I think is, perhaps somewhat brilliant about the system and how the fiat system and how it's been structured today, right, is that anytime there's a big sort of external event that happens that brings the economy to like a halt or a screeching thing, or just injects the economy with a great amount of uncertainty, right? You need to have a way of jolt it back into form, right? And that is palatable to the majority of your constituents, right? One of the interesting things about something like fiscal stimulus, right, is that the people receiving the money, they're going to be great. Like, they're going to be very happy because these were people that could otherwise have received nothing, right? The people that would have a concern about this, which is the people that hold the cash, right? Well, they have ample notifications from the government that this is going to happen. Like, this is going to be taken to Congress, and then it's going to be taken to here. Good chance this is going to go through, guys. So like, position your portfolios accordingly. And so the wealthy guys are like, okay, this is coming. Let's get out of cash. Let's get into equity, into property, into Bitcoin, into this. Let's let inflation do its thing, and then we'll just get richer, right? It's this ability to perpetuate the people that have the assets and appease the people that have no income, both in one go, right? So I think that's probably why this system has lasted for as long as it has, because it finds a way of catering to the haves and the have-nots in a way.
No, I completely agree. And I was wrong. It was not David Fisher, Richard Fisher, former Dallas Fed chair. But I completely agree. And it is this weird, right? Because I said this last year, like, why bail out the corporations when you should be airdropping? If you're going to make people stay home from work, like, give them more money. Like, you can't. Like, that's what is causing a lot of the social unrest behind the scenes. And then that's another thing that makes me extremely bullish for Bitcoin, because a lot of people are like, oh, the government's going to ban it. And you certainly have unelected bodies like the Financial Action Task Force trying to do their best to prevent Bitcoin from getting into the hands of individuals and being used in a P2P fashion. However, Bitcoin does provide these governments, these politicians, these central bankers that find themselves in a very precarious situation, because yes, they can appease both sides for quite a while, but eventually it will lead to social incohesion. Like, you can only print and try to appease the rich and the poor at the same time with this exact policy for so long. And the chickens or the hens do come home to roost, right, at some point, and they will. And history has shown this time and time again. Thousands of years of human history has shown this. Like, it would be hubristic to think we're not going to follow that. And again, bringing Bitcoin back into it, like, I think Bitcoin actually provides an opportunity, like an escape hatch, a political reputational escape hatch for these politicians and these central bankers, where they don't necessarily have to come out and say, oh, you guys should go adopt Bitcoin, because that would incite like a mad exit from the weaker currency to Bitcoin. But just stepping back and letting states like Kentucky welcome miners in with tax breaks for on sales tax for electricity, letting cities like Miami push to bring like more Bitcoin businesses into their domicile, letting Wyoming do what it's doing, and just not necessarily tip the hat and be like, yeah, citizens go adopt Bitcoin, but just letting the Bitcoin economy flourish and naturally letting it, like, a little bit of Bitcoin get into the hands of a lot of Americans. Probably won't reach every American, but I mean, I would imagine it's tens of millions now and likely to grow moving forward. And you can keep those policies going on the fiat side. And when the hens do come home to roost, at least a significant part of the population has some nest egg accumulated to help revamp things. It's not as desperate as it otherwise would be. This is just a theory.
I think you're bang on. I mean, I interpret it in a similar way. I think there's obviously huge consequences for a government to come and say, oh, Bitcoin, we accept Bitcoin as money, because that eventually puts it on the same level playing field as their weaker money. And so it just creates, they can't do this openly. They have to find a way of tacitly encouraging you to do this, right? While protecting the sort of reputation or their brand of their own local currency. And going back to the point about Bitcoin as an escape hatch, I could not agree with you more. Why I say that is true in the States, but even more so true in Latin America. Why? Because if you think about hard assets that hold their value and preserve their value well over time, what are those? Stocks, equity in companies, perhaps, property, real estate, perhaps, gold, you could argue, perhaps, over for a while now. Outside of those three, which one would you include?
Maybe energy. I can't even know. Like Bitcoin
Maybe,
is.
well, yeah, or maybe a strong currency, but let's just say that it's either stocks, property, or gold, right? All those three have, and by the way, it's not just any stock, it's US capital market stock. It's not stock in the Bovespa or the Caracas Stock Exchange is as good as having cash. So if you say these three assets are the ones that can protect your value, who has access to these three assets? The common person in Latin America certainly does not.
Yeah.
You don't have access to property. You don't have access to gold. You certainly don't have access to US equity. So for those people, for the majority of the world, in fact, affording a hard asset was impossible. They would have to save up their entire lives, and even then they likely couldn't buy a house, or likely couldn't buy a gold bar or something that they needed, the minimum quantity that they needed to kind of get their foot in the door. Today, you can buy $1 worth of Bitcoin, 10 cents worth of Bitcoin, any amount worth of Bitcoin, and you can start saving that Bitcoin over time and then get the tailwind of inflation, right? And then have that Bitcoin value go up. One of the things that I love about my job and about what we are building at Ledn the most is we have seen clients in countries like Colombia, like Venezuela, that start sending Bitcoin to their savings accounts, $10 by $10, $25 by $25. Every week they send a little bit and a little bit and a little bit. And one case in particular, he's become relatively close to me because I've seen him from so early on basically saving up. He is a guy that mines. He lives in Venezuela. And once he hit the minimum collateral amount to access a loan, which we issue loans at $500. So when his Bitcoin in his savings account hit $1,000 worth of value, he was able to apply for his first loan. And he used the $500 to buy another miner, or parts to fix another miner to keep it going again. And he reached out to me personally to say, I can't thank you enough for what you guys are doing. You guys are the first loan I've been approved for. And to us, that's like everything, to obviously we love high net worth clients, they're great, but to be able to enable someone
bootstrap a small business, right?
Yeah, and remaining wealthy, right? Or at least preserving the little bit of wealth that you have, right? How frustrating is it to accumulate, I don't know, 1 million bolivares over a year, only to wake up one day and because of a decision that the central bank made, then your life's work is halved.
Yeah.
And so, to us, Bitcoin does provide this escape little vault for small people more so than big people. Of course, big people get into it quick and they figure it out, right? And then you got Michael Saylor, raising $1 billion just to buy more Bitcoin on their company, and guys like Elon Musk buying Bitcoin for the Tesla balance sheet, and of course the really smart guys will get into it, but it doesn't price out the little guys, right? And so I think that's very key, because it's about access almost than
No, right? And because Bitcoin, you can accumulate it with your time too. This is Paul talking with Paul Toy last week, and we've been talking a lot since we recorded that podcast on Sphinx Chat, and what he's describing what they're doing at Stackwork by just getting preloaded Android phones to people in the Philippines and Argentina specifically, and basically having them do mechanical Turk like tasks to earn Bitcoin. He's becoming, or I don't know if he's becoming, but he's articulated in public Sphinx chats and in our tribe, so I feel comfortable saying this, like a lot of people focus on the path to monetization being store value, medium exchange, unit of account, or like just seeing what he's seeing at stack work. Like the opposite is also true, and will probably be the way it happens in countries where people don't have access to other hard assets, and so it'll be unit of account first. They'll work for sats, and then they'll get those sats, and they'll get onto platforms like Sphinx or Ledn or Bitrefill, whatever it may be, where they can use their sats as a medium of exchange, and then they'll basically bootstrap a quality of life that makes them able to get up and work and fulfill the lower part of Maslow's hierarchy of needs, and then they'll begin to see it increasing in value, and then as it keeps increasing in value, they'll siphon it away as a savings account. And that's like the beauty of being able to do work anywhere in the world and receive Bitcoin for it is another aspect that really gives the little guy like a chance to get in and actually build themselves up slowly over time.
That's a fascinating model. I would love to learn more about that, because I think that's almost like it can provide a profit, but it's also like almost humanitarian work, you know. Right. So it's not often actually. We had an investor say this to us recently, which I thought was probably one of the nicest compliments that we've gotten in a while. And his conclusion was, after hearing our story and kind of what we were doing, is like, it's not often that you see companies that get to fulfill a great mission and also get a financial reward out of it. I think that case in particular resonates tremendously with that for me. And I think, what we do in a certain way as well, right? Like, we let people all over the world save and earn interest and access loans at rates that they could otherwise never have access at home. So it does, in a way, kind of tick more than just one box, right? Because it does work that you can feel great about, and at the same time, it can make you some money, right? So it's not often that you have that setup.
Yeah, I mean, not to blow myself either here, but these flares behind me, like, we're able to make a profit by helping reduce methane leak. It's like, wow.
Dude, I'm such a fan of that model. I just have nothing but great things to say, and the kudos to you guys for essentially, because I guess where you're having to go and talk to like the oil and gas world to convince them that Bitcoin's the future. And I think a lot of people say, oh, like some industries are set in their ways and they're old school. I would argue that oil is probably one of those.
Oh, they are. So, they're a stubborn bunch, but we're dragging them along. Don't worry. Yeah, no, but it's like crazy. The fact that this is all global, right? Like, just focusing on what you're doing, and like people like Paul at Stackwork, right? Like, so I'm looking at their site now. It's nothing crazy, but it's material for some people. They paid out 269,000 sats. So that's like $120, but to people working in areas where they wouldn't have the opportunity to have a job in their local spot. And so they're getting paid in sats. Then they're getting this phone with preloaded software, and they slowly pay off the phone over time, and then they get to keep it. But like they're getting these phones, and they're getting access to the internet, which presents other opportunities where they can go get other jobs. Maybe they are earning sats at stack work, but then they use that phone to do some other online work for Bitcoin. And yeah, I really like that idea that it can help bootstrap people in precarious situations. And you just got to get them access to a phone and a digital job, and then getting them access, like giving them the ability to leverage their capital and reinvest in themselves is another massive thing too. Like the products that you guys are providing, and potentially earn interest on their Bitcoin if they want to, and sort of grow that if they have a stack that they have set aside. That feels like it's all happening, and people hate on Bitcoin. Why are these people hating on Bitcoin? It's providing so many opportunities.
I think some of the hate may come from just the fact that no matter how fair you try to be when you're distributing a new asset, it's just never going to be equal, right? And it's just never going to be, there's always going to be people that manage to get learn about it earlier or get into it earlier or were exposed to it earlier. And I think some of the resentment comes from a little bit of that place, right? Like, oh, here you guys are, just making money because of the decision you made 10 years ago. Like they try to kind of blanket everybody. And it's more of I think sometimes, again, I don't want to speak for everyone. I don't even know what a no coiner mind feels like. But
It's a very foreign concept. So long ago.
But to me, and I remember when I first got into this and I first started reading about Bitcoin, I was like, oh man, I wish I got into this earlier. What was I doing in 2012, or 2013? Like, but once you get over that, you understand how many more people it can help, and how much of an impact you can have by joining this this movement, right, and trying to drive it. I think the people that look at it and go, oh, you guys are just lucky, this is just a bubble, like there's an element of, you don't understand inflation. Really, you don't really understand the problem that Bitcoin's trying to solve. And the second one is, you haven't benefited from it in any way. Like, if anything, you've had to deal with like some annoying guy in your class, or that or some young kid that was a rebel and all of a sudden is a millionaire. And it just goes against certain parts of people's character, or certain people's characters, and it just becomes a hard pill to swallow, to say, yes, I'm okay with these guys that got in a while back doing great because it's going to help a bunch more people. It takes a lot of maturity to get there, right? And yeah, and that's kind of what I would pin it to. I think it's just the lack of understanding for the most part.
Yeah, don't let pride get in the way, freaks. If you're a no coiner listening, just curious about what's going on, you peeked into this episode for some odd reason, or a good reason, could have been a good reason. Don't let pride get in the way. It's still early. It's still very early. There's so much to do. There's so much going on. We're literally potentially building like a new internet on top of Bitcoin with like what's going on with Lightning and stuff like that. I guess that's another topic to roll into for like Ledn. Have you guys been following Lightning, the development of any second layer solution, whether it be Liquid, Lightning? I know you guys are in stable coins, and that's been providing a ton of value to your users as well. How are you looking at the stack being built on top of Bitcoin right now, and looking to incorporate that into what you guys are doing?
Yeah, it's a great question. So we have a lot of clients. Like, we have clients that are large and small, right? Like, we have clients that have small balances with us. We have clients that have like hundreds of Bitcoin with us. Obviously, I think we try to view this as people that are going to love our products are people that can benefit from our products, right? And people that can find value in our products, right? I think like layer one Bitcoin is still pricing out a lot of people from transacting, particularly in the small end of the spectrum, right? Like, if you're somebody that you literally, and a lot of people just have a couple $100 worth of Bitcoin, right? And if you're being asked to pay 20, 25 to transact that thing, it prices you out, frankly, right? Like, it prices you out of this unit of account settlement type of desire, right? So I think what I'm most excited about for Lightning is this ability to seamlessly, basically bring the same experience of a person that has a full Bitcoin or a half a Bitcoin, that it can really handle the friction of transacting because of the price, because you're buying something that's much more expensive or investing in something that has much more upside. So bringing that same level of comfort and control to somebody that has 0.001 Bitcoin, right? Like, I think that is something that makes me very, very excited. So one thing actually that not a lot of people know, and we're going to be making more of an effort to essentially make this more widely known, is that transfers within Ledn accounts are free. So because in a way we operate as a bit of a side chain, you don't have to go through layer one settlement to essentially send from my Ledn account to yours, Marty. Like, we wouldn't have to go on chain to do that, right? Like, we could just make a sidechain entry, and so that you don't have to pay those $20. And we are starting to see a lot more people use that option, especially during congestion times, right? Because it's a pretty interesting value proposition to say to somebody, hey, I'm going to send you some Bitcoin. Oh, by the way, I'm going to send it to my Ledn account anyway, where it's earning interest. can you just send it to me here? And by the way, it's going to be free. We're starting to see a lot more people do intra-Ledn transactions. And the really cool thing about that is that because we've built a large contingent of clients in the US and a large contingent of clients in Latin America, we're starting to see that flow basically across the two poles. And it's fascinating to us because people are smart, right? Like they see how they can basically get what they want done, and they'll if they find a way to do it in a way that they're comfortable and it's cheaper for them, they'll do it. And so that's something that we're really excited about. Now imagine if sending Bitcoin onto Ledn costs you fractions of a dollar, and then withdrawing your Bitcoin from Ledn, if you're somebody in Colombia, were to cost you 25 cents versus $25. Like that unlocks a brand new demographic. So that's something I'm really excited about for Lightning.
Yeah, it's powerful. Like again, like just getting linked into the podcasting 2.0 platform and having freaks stream as sats. Like it's just, I can probably check my phone right now. Like, yeah, it's got like I'm on airplane mode, so I've been getting notifications. But like if you go down here, you can see like, boom, 17 sats, 16 sats, 17 sats, like every minute.
Man.
And it's what, like 5 cents, if that, like 6 cents just being streamed directly.
That's incredible.
Even less than that. But no, it's just like it's possible, right? Like we can, and like it's here. It's
5 cents at scale, man. Like 1 million people paying 5 cents. Adds up really quick.
Right. And like even that, like if I do want to touch on like the interest bearing accounts, because that's something we were talking about a few weeks ago, like the duration matchup that you guys are working on the risk management side. I thought that was really fascinating. And like hypothetically, that's something you can do. Somebody just puts collateral up or locks up Bitcoin in a savings account and they're getting small amounts. Could you hypothetically like pay out in Lightning like automatically? Like, right? Like something like that.
Yeah, I mean, like the streaming element would be more so if you're getting the interest payout, I guess, somewhere off platform, because we can stream it in platforms as long as you're not pulling it out on chain, then you wouldn't really feel the difference. But I agree with you that Lightning unlocks a lot of use cases, and particularly it makes the use case for remittances all that more attractive, because it really drops the cost of transacting down to like pretty much zero. But no, I mean, that's kind of, I envision our first sort of implementation of Lightning to be this option to allow people to send and receive Bitcoin with much less friction. I think before we moved into anything else, that would be the first place we're going to go, essentially to adopt this and to make the platform even friendlier for a lot of people that have smaller balances. But I'd love to get the if you want to get into the interest bearing accounts, I'm more than happy to get into those, because we love talking about those.
I mean, yeah, I can hear the freaks screaming in the background. Rehypothecation, like too much risk. Is it worth the interest rate? Market's demanding these products. People are bringing them to the market. I'm here to talk to somebody that is about how they're doing and how they're managing risk. And again, like Mauricio, we talked about it 2 or 3 weeks ago, like one way you can manage the risk, particularly is interest bearing accounts, is matching up like durations on the back end of how that's being lent out on the other side, and how long people plan on locking that up on the Ledn side, correct?
Yeah. So one of the things we have to manage is this concept of what happens if everybody shows up and wants their Bitcoin back on the same day, right? Like, do you have the structure on the back end to facilitate that? And that's something obviously we thought very long and hard when we were setting up the account. So the answer is yes, we do. And the way we structure that is essentially whenever we lend Bitcoin out, we have callback periods that are within or smaller than our terms and conditions times to return that Bitcoin. So we've thought about, we'd like to think as long and as hard as you potentially could from a user standpoint, from a client standpoint, right? Like if I'm going to use this product, what are the questions that I want answered, right? Like, what are you guys doing with these? How long does it take to take out? if everybody showed up at the same day, could you be able to do it? Right? Like, how much risk are you taking to get this interest rate? Like, is this risk profile similar to other platforms? I think the trickiest part of this whole thing that I just said is probably that last piece, right? Is this idea that all yields are the same. Like right now, you show up into a lot of these interest ranking pages and you see rates just stacked up on each other as if they're like apples at a at a grocery store, and they're all the same apples. And I have to say, like, that's, although those pages are helpful for people to get an idea of, or benchmark where the industry's at, there is incredible nuance between one rate and the other, and what risks people are taking to get there, and essentially what the underlying driver for those rates are in the business, right? So I think what I would welcome people that are interested in these products do is try to get on the phone with us. Like, we take calls with our clients all the time to essentially explain to them how we're managing risk, how we're making that yield of like possible, answering exactly these questions. Like, if I showed up and wanted to withdraw my coin, how long would it take? Could you do it? How do you protect against this concept of everybody coming to withdraw all at once? These are things that we have thought through at depth. And, we've done our absolute best to structure these in a way that people are going to know. What you see at Ledn is what you get, right? And we like being very transparent about A, the potential benefits of using the account, but also B, the potential risks of using the account. And so we just think that's the best policy, is to tell people exactly, what you're doing as best as you can, and what they can get and what they should expect, right? And so that's kind of how we've been approaching that. But if there's any one of those areas that you'd like me to like dive deeper on, I'm happy to.
No, I mean, the duration matching is very interesting, right? Like, how do you prevent a run and make sure that all your customers are liquid? It's it's like a hot topic in the space right now. And I guess without calling out anybody in particular, but I'm sure people understand what I'm talking about when I ask this question. But like, are you guys doing any trading in Bitcoin exposed products yourself, like on the back end? And if so, like, how do you manage that? Like, I guess people are most worried about like rehypothecation risk. Like, on the other side, if you're lending your Bitcoin to Ledn, and then Ledn's giving it out to somebody who's using it to margin trade, and they get called, like, how does that domino affect the end user at the end of the day?
Yeah, that's a great question. So to date, we have not participated in any trading or any kind of trade opportunities directly through Ledn. Their activity has been basically aggregate Bitcoin and lend them out to our institutional counterparty, which to date has been primarily Genesis. And so that's and we're very transparent about that on our website and to all our clients. So we don't have any direct exposure to things like the GBTC trade, to give you an example, just to put it out there, right? The industry itself has some exposure to the GBTC trade because a lot of the people borrowing from Genesis were trying to participate in trades like the GBTC. So I think, and again, we like being very, very transparent, right? Like, the industry as a whole, like the lending industry, has some exposure to that trade itself, because for a long time, that trade was a cash cow for many lending companies that were essentially booking a 17% premium. It was almost free money in a way for anyone that could do it for a long time, right? So what I think will happen ultimately from this is that there will be some rate compression, because there are more and more people wanting to earn interest under Bitcoin. So there's a lot more Bitcoin available now to be lent out, and to essentially to be lent out to do these types of operations, right? And then the other piece of that is that there is an army of sophisticated investors that used to be only in equities and used to be only in FX, that are now seeing the opportunity in Bitcoin, and they are entering into arb out these inefficient markets. So that's making the trades more compressed, and it's basically upping the quality of the participants in these venues, and the supply has essentially grown tremendously. So those two dynamics eventually lead to rates getting compressed overall.
Mm-hmm. And I'm just wondering like where the next like ARB opportunities now that GBTC has been compressed to a discount, like mining equities. That's like a hot.
No. I mean, listen. There's a quite a few market neutral type trades that you could do. Like future versus basis, I think is gonna be pretty much the benchmark for going forward. I think that's you can still get some really good rates right now by doing that. The volatility, like the options markets are, most option contracts have volatility north of 100. And so that's a market that is ripe for competition and maturation as well. So those are two interesting opportunities. And then there's the other piece of, Bitcoin doesn't have a central market, right? So there will always be opportunities for people that want to market make across different venues and are comfortable with the risk in those venues to essentially try to arb those markets out and bring Bitcoin rates to be more uniform across venues.
Yeah, it makes sense. Why do you think people get? I mean, I think a lot of people throw their arms up around these products is truly out of the goal of helping make sure that people don't lose Bitcoin, which is like, as a company, that's the last thing you want to do, right? Like, you never want to liquidate customers on the lending side. You never want to divvy out Bitcoin on the interest bearing side to people on the back end that you think are going to lose it. So and then again, like these products are being demanded by the market, and you're coming in and trying to provide that utility that people are seeking out. And it's just like, it's a much maligned part of the industry right now. People get very emotional around it, and I understand. It depends on your risk tolerance, right?
Same here, man. I was a Bitcoiner before I was a lender, so I completely can relate to those concerns. They were questions that I asked myself at the beginning too, right? And I think that if I could kind of bucket the two biggest fears or the two biggest sort of rebuttals from the Bitcoin community to these types of products, I would put one camp on the not your keys camp. So they're very much about custody, and you just lose this whole power of custody and the transparency and the control that Bitcoin gives you by having custody over your node. I that's something that I understand. Where we so first off, we won't ask you to ever concede the custody of your Bitcoin in exchange for nothing, right? Like that, nobody will do that, right? And so when we do this, the best way that we have found to provide these services in a way that is comfortable for our clients and it satisfies the interest of regulators like Canadian regulators or like FinTrack and things like that, like know your client policies and anti-money laundering policies. Like the best structure that we could think of to offer these services was this custodial format. And what that allows us to do is, sure, you're foregoing the custody of, or the self-custody of that Bitcoin, but you're doing that to get a loan, right? And then with that loan, you're going to solve another issue, or you're going to save money that you would have paid otherwise on capital gains tax if you would have sold that Bitcoin. So it's always a trade-off between the value that you're getting from using our products and the fact that you're giving up that custody, right? What we also don't sit still. We know that it's a huge responsibility to have custody of someone's Bitcoin. So we want to show people that we are doing what we say we do. And that's why we are so gung-ho about proof of reserves, is because we want people to know that we're accounting for things properly. And we want people to know that what we're saying to them that we're going to do is in fact what we're going to go do, right? And although there's like this hard fact that you have to give up custody to access our services, we try to make that process as transparent and as upfront as we can, right? And that's on the custody side. And what was the other bucket that I had? So it's a not your keys camp. I forgot who else I had mentioned. I'm drawing a blank here.
And the risky, like your counterparties on the other side camp, or like the short sellers? Everybody's like, they're short sellers.
The short sellers. Oh man, yes. Don't get me started on that one. So a lot of people assume that any savings account is just lending Bitcoin to this evil hedge fund that is just short Bitcoin, right? That is very much not the case. Going back to, again, we lend directly to our primary institutional counterparty, which is Genesis. So they are the ones that in turn are lending out Bitcoin to these prop traders or hedge funds, et cetera, that are taking these trades. So I don't necessarily have an exact pulse on the percentage of borrows that goes to shorting, but if I had to guess, at its peak, it was probably around 25% of the total sort of lending activity. And if you ask me what it is today, you can look at the long short interest on platforms like Bitfinex using TradingView. Those things are at record lows. Perhaps some more people are starting to short Bitcoin at these levels, but as of 2 weeks ago, they were at historic lows of short interest. Like nobody really wants to short Bitcoin right now.
Hypothetically, they could be, theoretically, they could be going margin long with that too, right? Like,
100%.
Yeah. It's like, you can still get liquidated on that. The price goes down. But yeah, it's just so like, do you do like a risk assessment of how much value? I mean, and would you even be able to? So now I'm putting like my fund hat on, and like at a fund, I worked for a very conservative fund, managed futures, which is a conservative part of the portfolio. And just think about value at risk models. So like I'm thinking about the funds that would take that Bitcoin on the other end, and that's what I think a lot of individuals who haven't been in finance don't understand, like this concept of value at risk, and sort of the mandate at the fund level, at the LP level, that you're only allowed to put a certain amount of risk, especially if you're for certain funds, not every fund, obviously. And some have like high yield mandates, are allowed to take riskier bets, but there's others that are only literally allowed to put a certain percentage of the overall fund value at risk at any given point in time to limit downside risk. So me explaining this is like, could you as Ledn sort of evaluate your counterparts and their value at risk models to make sure like they're not allowed to put all the Bitcoin to give them at risk or something like that? Or could you even do that?
Yeah, 100%. So maybe I'll spend a minute to talk about some very exciting key hires that we've done to help us on pretty strategic parts of the business. So somebody that we brought on that we're incredibly excited about, I think I already mentioned this earlier, was John Glover. So John, like I mentioned, he helped us. He's helping us essentially build our lending desk, and he is what you were describing is precisely that, like the experience and the skill set that he's going to bring to the table, because he's been essentially analyzing counterparty credit risk and credit risk itself for decades, and talking to these very seasoned funds, financial institutions, banks mostly, right? And that is really if I put my lender hat on, my institutional lender hat on for a second, that's really the dream counterparty that you'd like to have from a risk management standpoint, is a group that is incredibly well capitalized in the billions of capital, and that has a small crypto component or Bitcoin component to their strategy that makes up probably no more than 10 to 15% of their total activity. And that is, in a way, that is one way of getting yourself comfortable. And also, if this fund is also in a strongly regulated jurisdiction where there's like strong compliance and you have audited statements, etc., that is what I would call a high quality profile for a borrower of these types of assets.
Yeah, right. Like the Bitcoin part of the fund's so small that if they did get liquidated, they'd have to pull in assets from other parts to fulfill that net margin. Yeah, makes sense. It's like, but it's like these little nuances that a lot of people don't get. There is risk. We've been talking about the whole time. Like you guys are upfront with the risk; it exists, but you can mitigate it to a certain extent, right?
To the best of your abilities, right? Like, yeah. And then the other piece that I'm very excited, because I've been needing some help on the marketing side for a while, is that Mario Gibney is actually joining us.
Oh, hell yeah!
Yeah, so he's been a great friend and a longtime client. So we're very, very pumped to have him join our team. And he's been around the space for quite some time. And so very, very excited to have him join us. He should start actually in a couple of weeks.
Hell yeah, he was at Blockstream for a while. Been around the space, been talking about Bitcoin. He's part of he's on the Unhashed podcast every once in a while.
Yeah.
Yeah, he's on the Unhashed podcast as well.
Yeah, he is.
He knows his shit.
Yeah, man.
Congrats on that.
Thanks, man. Yeah, no, it's a really smart guy. There's a bunch more people that I can't share just now, but we're very excited at that. Just the amazing people that are saying, "Hey guys, love what you're building. How can I add value?" And obviously, if anyone listening to us right now loves what we're doing and would love to come work for an amazing Bitcoin company, I welcome you to both check out our website and even email me directly, Mauricio@Ledn.io, send me your resume, because we're growing the team quite dramatically over the next, call it 3 to 6 months, and we'd love nothing more but to have more Bitcoiners join the family.
Yeah, no, I'm pumped for you. Like I said, we've had many conversations throughout the years, and you've been grinding, you and Adam. And I can remember a conversation a few weeks ago. We were talking about like March of last year and how low the low was, and like how desperate it can get. But if you grind and you keep on grinding, keep on showing up, like good things will happen, especially if you're providing the market with a good product. So I'm extremely pumped for you guys as well. It hasn't been easy, and that's the other thing. It's like people are like, "Oh, it's an overnight success," but it's like, "Nah, I've been watching it from afar, freaks. Not afar, but I forget when we first met. It had to be like 2017, 2018, and it's been a grind, right?
Yeah, I think it was at Arepa Cafe there was like a Venezuelan party in New York. Is that where it was?
2018, I think. Yeah, consensus 20.
Yeah, something like that. Something like that. Yeah, it's been exciting, man. I still remember that day. I'm a huge fan of this pod for as long as I can remember. So having a chance to the first time we were here, I still remember how excited Adam and I both were to like be on this show and like just share our story with people. And I remember on the way in, we were walking across the Brooklyn Bridge, and as we were walking through the Brooklyn Bridge, I got a phone call from one of our first clients, and he basically saying, well, I'll have to check with him before sharing his name, but he basically told me, "Guys, love this. I have loved my first loan so far," because at that point we were just turning about a year old. And he's like, "I really love this service. Love you guys. Think you guys, your company is great. I'm gonna take a much bigger loan." I think at the time it was like a 75K loan that the client was taking. And for us, like at that time, that was an important loan. So we were like, "Wow, like this is a sign." We're walking into Marty's spot, and like people are emailing us because they love the product, and just like how happy we were when we left. And that was right around the time when we were, I believe, having our first conversations with the guys at Genesis. So that whole trip, man, was very, very memorable for us. And yeah, I still remember that very well.
Yeah, it was. I remember it well too. It's beautiful. Like again, it's been. That's the other thing. Like, it's beautiful to see good people do good things and succeed. And so, like, that's why, like, I'm very pumped for you guys, and I'm happy that we were able to catch up, and can't wait to do it again in the future. We've been here for an hour and a half now. I know you're a very busy man. I do have one more topic I want to touch on with you while I have you, and I want to touch on you. I'm sorry. While I have you, isn't like one of the dudes who helped launch the Petro, hasn't he been going around like trying to like save face here in America recently? Like, what's going on there?
God, don't even get me started.
I don't mean to put you on the spot, but it's just like I haven't had the whole down low on that. And
okay, I'll give you my 2 cents without naming names. Okay, by 2017, any person of age that at face value still believed that the Venezuelan regime, because at that time it wasn't even a government, had the willingness or even the most remote intention of doing something to help the Venezuelan people, pardon my English, but I think that's bullshit. That's absolute bullshit. you couldn't have been a Venezuelan person of age and getting called up by someone in the Maduro camp and thinking you're going to go do something good for your compatriots. That will not fly by me. That will not fly by me. What was most likely back in those days is that whenever you got a call for one of these guys, it either meant you need to leave the country, or if you agree, you're going to get a big payout. So I would, with every fiber in my body, question the intention of somebody that said, I thought they were going to go, and I thought I was going to help my compatriots. I do not believe that flies. I don't think that's honest. With regards of how much or how quickly a PR campaign can clean that up, well, that's for people to decide, right? Like, what I would argue is that there are many of us Venezuelans that are actually that took a lot of risk to help other Venezuelans get into Bitcoin. Speaking for myself and my family personally, we were literally chased out of the country because we help people mine. That, to me, takes a lot more guts than to pick up a phone and cozy or buddy up with Maduro under the premise that you think you're going to go help the Venezuelan people. No, bro. You think you were going to get rich, and it backfired. And now you want to leave the country the same way everyone else does. And you need to clean up your face and you want to come join this rocket ship of an industry that we're in. And you basically don't want to waste your ticket. You feel like you still have a ticket, and you're basically doing really hard to get on the plane. I feel sorry for the people that won't ever do the research to understand what that actually means, but I would be very careful of any kind of organization or anything that is associated with those kinds of characters.
Yeah. Thank you for sharing those thoughts. Sorry for putting you on the spot, but I think it's important to hear your perspective on this, because I have seen that going around, and it is pretty, just somebody outside looking at it, it seems like a pretty shitty thing to do. So I wanted to get your thoughts on it.
No, man, listen, I appreciate it. I don't shy away from saying things that I feel are genuine and as how I feel. You might find other people that don't agree with me on this. I will stand by what I have seen and the opinion and perception that I have formed over time. Because I tell you, like, I know that setup quite well. And I've seen people very close to me do things very similar.
I was just going to say, any freaks who haven't heard Mauricio on TFTC in the past, go back. You told the story of your family and the situation you found yourself in around Bitcoin mining. It's fucking insane shit, man. It's and that, like, I completely agree with what you said. That is actual, like, help skin in the game, putting your neck on the line, quite literally, to a certain extent. Yeah. Well, again, like I said, I'm very happy to see very good people having great success, especially in this space. And it seems like Ledn is reaching escape velocity. So I'm pumped for you. I'm pumped to see the team that you continue building. Tell Adam I said what's up. Is there anything that we should leave the freaks with before we wrap up here?
If you haven't checked us out already, check us out. And if you like what we're doing, great. If there's something you think we could be doing better, let me know.
Awesome. Mauricio, can't wait to do it again. Thank you for joining me.
Dude, thank you so much for the opportunity. It's always a blast.
It's a wide open invite. You know that. Peace and love, freaks.